Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is a 4-hour chart of gold USD in front of us, and as per our expectation, the resistance of 1790 was valid and we saw some selling or profit booking around the level, and we got a good trading opportunity. Right now market is standing at 1785 level. So my dear friends, let's get started. And if you're busy right now, then please watch the video later when you're free, because there are certain things that you need to understand with a cool mind. Okay, so do not compromise with your hard-earned money. Protect your hard-earned money, and as I always say, capital protection should be the first priority of any trader. That's why you need to keep your brain cool. Okay, so let's try to understand the chart of gold USD step by step. So first of all, yesterday we talked about the wedge pattern that we were observing on the chart, and you can see that the wedge pattern is still very much valid here. You can see that there is a high possibility of market going down as well, because we have a kind of a wedge pattern, and moreover we also have a head and shoulder pattern also. Usually I do not like to talk about patterns, but yes, I can see these patterns clearly. That's why I'm talking. Apart from the wedge pattern, we also have the head and shoulder pattern also developing. Personally, I do not like head and shoulder pattern at all, but yes, head and shoulder is extremely popular pattern and really works in the market as well. So yes, we cannot ignore it. So we have a wedge pattern, then we also have a head and shoulder pattern developing in this area as well. In both the wedge pattern and head and shoulder pattern, we usually see market going down. And yesterday I clearly showed on the daily chart also that market is standing at the dynamic resistance here of the 50 moving average, and the 50 moving average previously acted as resistance as well. So if we combine all the factors, then yes, there is a possibility that in the coming days we may see gold going down as well. Okay, because of the wedge pattern, head and shoulder pattern on the 4 hours time frame, plus the on the daily time frame also showing us that market is standing at the 50 moving average. And though market is standing at the dynamic resistance on the daily chart, it is unable to cross it. That is a big factor that we cannot ignore it. But on the same chart we have another thing called as the ascending triangle pattern as well. Why ascending triangle pattern? See, usually ascending triangle pattern is important in an uptrend market, but in this case, if this is a support zone, sorry, not support, this, if this is a resistance zone in the market, then you must understand that, see, market is unable to cross it. Market is unable to cross the resistance, but whenever market is coming down, it is not crossing the previous lows as well. So yes, it also resembles to ascending triangle pattern as well. Ascending triangle pattern means though market has a resistance at the top, but buyers are not ready to surrender, and usually in ascending triangle pattern we see market breaking the resistance and going up. So if we follow the patterns, then two patterns are indicating towards a downside, and one pattern is indicating towards an upside on the market. Okay, so this chart has become a little bit complicated right now, so you must be very careful when you are placing the order. So what should be our strategy then? So as right now market is standing at 1786 level again, okay, you should not take any position. See, it is our hard-earned money, so it is our responsibility to protect it. How we can protect it? We can only protect our hard-earned money if we take position at the right moment, at the right level. So in this case, the right level is around 1790 to 1800 again. But yes, 1700 to 1900, 1800 level again, we can expect a selling pressure. But in case, listen to me carefully, in case if we find market breaking 1800 level, do not take any sell position. Okay, do not take any sell position. In fact, I was also trying the Fibonacci, but Fibonacci was not giving me the clear sign, so I avoided Fibonacci here. Usually I love Fibonacci, you all know. So if market breaks 1790 to 1800 level, okay, then do not do anything. If you see that market is forming big green candle, then you can consider taking a buy position. Otherwise, if you see that market is standing at 1790, 1800 level, just wait and watch. If you see market reversing again, just like the previous times, if you see market reversing again, if you see market is showing price rejection from above, then only take a sell position. But keep in mind, follow proper risk management, because things are not very much clear right now. Okay, and on the other hand, if market comes down to this trend line here, you can see the trend line is acting as a support here. If market comes on trend line here, then personally I will just suggest all of you to avoid, okay, because market has already tested the trend line too many times. So personally I will not prefer to take or place any order right now. And moreover, we can also see that we have a very narrow range here, so it is better to avoid if market comes down to the trend line. But 1765 can be a good level to place a buy order if market bounces. Okay, and in case 1765 fails to provide the required support, then the next important support will be 1755 to 1750 level. Keep in mind, no level is permanent in the market. As a trader, you cannot trade blindly. As a trader, you will have to observe the market when the market will be at the level. And this is the main difference between a gambler and a trader. A gambler trades blindly, whereas a trader trades with proper logic and when he feels that the trade is right. So when market will come down to 1765 level, observe the market. If you see the market is trying to take support, if you see market is forming hammer kind of a pattern or any good price rejection from below, you'll get the confirmation that yes, market is trying to take support and you can go for a buy position. But in case if you see that market is standing at support but market has formed a big red candle, do you think that market will respect it? No. In that case, if you see that market is standing at support but market is forming red candles, just avoid it, because there's a possibility that market will be breaking the support and going down. In that case, you can wait for the market to come down to 1755 to 1750 level and we can expect a bounce. Today we do not have any fundamental factor coming up that will drive the market or will bring some crazy volatility. So more or less, I think that market will show some normal volatility only. So trade carefully, and as I always say, be a trader, not a gambler, and please follow proper risk management. This is my analysis, I can be wrong as well, so please be careful. Bye bye, take care.